What's up, guys? Welcome to Financial Tip Tuesdays. We got a good one for you today. Today we are talking all about cash flows and how it affects the business, and just kind of a general, easier way to see the cash flow of the business and where the cash is actually going. You can kind of see where the cash is going by looking at the balance sheet and the income statement, but in order to actually get a breakdown of how the cash flow in the business, where the cash is going in the business, there's actually a separate statement that you can actually generate in order to show you exactly where the cash is going. So like always, this is applicable to small business owners and really any business owner out there that wants to understand more about their cash flows and where the cash is going for the business. So I have my board here. I'm going to kind of show you an example of how I like to do cash flows. There are a couple different methods that you can use in order to figure out your cash flow, but this is the method that I like to use, so I'm going to show you that. So let's go ahead and dive in. So let's fill out our board. Alright, so for our cash flow statement, this is what we're kind of looking at. This is a very general breakdown of what a cash flow statement would look like. So for this situation, we break it up into three different categories. We have operations, cash flow from investing, and cash flow from financing. And so what we start with is cash flow from operations, and we start with our net income number. And from the net income, we have some things that we call add backs. So those are the non-cash items that go into the income statement that actually don't affect cash. So we start from our net income, we add back our depreciation because that's not a cash flow item, and then we jump over to the balance sheet and we have to start taking account for the changes in accounts receivable. And if your accounts receivable goes up, that's actually less cash that we actually are showing, and so that would be a decrease in cash. Just like the vice versa, if your accounts receivable goes down, you actually have more cash because you're collecting more on your receivables, so your cash would go up. Exact opposite for accounts payable. If your accounts payable goes up, you have more cash because that's less expenses that you're actually paying for, versus if your accounts payable goes down, you actually have less cash because that means you're paying off a lot of those payables. Changes in inventory is also one of those items that affects cash, because as your inventory goes up and down, obviously your cash is going to go up and down with it. Then we jump into our investing portion of our cash flow statement. The investment portion is what you're investing into the business. So if you're buying machines or equipment for the business, that's what affects the investing portion. So right here we have either an increase or decrease in property, plant, and equipment for the company. And then we jump down to financing, and this is how you finance the company, how you kind of generate capital. If you're generating it through loans and stuff like that, then those changes in loans, either up or down, will either increase your cash or decrease your cash. If you're paying dividends out of the company, then obviously that'll affect your cash flow as well, and that's where you account for it there. And then we come down to the bottom of our statement here. We can then take the beginning cash from the beginning of the period, either add or subtract the change in our cash from our equation here, and then we have our ending cash balance, which should match the cash balance on our balance sheet for the company. So this is a very general way that we can kind of track the cash flows for the business and where the cash is going. Like always, reach out to your accounting or financial professional to help you with this if you get lost in the weeds and you're having a hard time getting it to balance out. They can help you out with this and make sure you're not missing anything, and make sure that everything is in there. Like always, feel free to reach out to me with any questions that you might have. My name is Steven Gabrielson with SLG Advising. My email is Steven, S-T-E-V-E-N, at slgadvising.com. I'd love to hear some feedback, both on the videos and what you'd like to hear in the future, as well as any questions you guys might have. Thanks for watching. Reach out again next week for another exciting video on Financial Tip Tuesdays, and we'll see you guys next week.